Hi and welcome to the Martin Bell Show, and in today's video we're going to be reviewing a news article from the Daily Mail Online, which is a British newspaper, and it's talking about Bitcoin and obviously other altcoins as well. Bitcoin has had a massive run up, but it also has had a massive pullback recently. So it's saying here, prepare to lose all your money. City Watchdog issues stark warning to investors in crypto assets on the day Bitcoin tumbles 22%. Personally, I do not think Bitcoin is an asset, but I do not think it is a currency. It may be used as a form of currency, but I don't think it is actually a currency. It's a speculative asset, personally. Because I don't think there is enough coins to go around to make it as a functional currency for the average person. I think there's around 7 billion people on this planet, and there's only 20 million coins, and I think 20% has been lost already. So let's call it 4 million. So that leaves you with 16 million coins, and more are going to get lost over more time. So I don't think it's a sustainable. Well, they call it a currency, let's go for that for now, but I don't think it's viable personally. The FAC warns of risk of investments promising high returns based on crypto assets. It's warned over volatility, complexity and local regulation of crypto assets. It is very volatile, so that's another reason why I don't think crypto is a currency, because it's not stable. It's very volatile in its price. It needs to have some stability, but people don't want that because they want to make them capital gains quickly. Bitcoin fell 22% after hitting a peak of more than $41,000 at the weekend. The financial watchdog has warned people putting money into cryptocurrencies like Bitcoin. Let me just firstly announce, I am not a licensed professional. This is not financial advice, it's just me documenting my journey and sharing my thoughts with you. I also do not own any cryptocurrencies or any alt cryptocurrencies. At one time I was mining them, and I did actually have them, but I'm obviously one of them people obviously also lost some of the coins. But I do not mine or own any coins at this moment in time, and do not plan to in the long and in the very long term future, because I do not think Bitcoin is viable and backing other investments linked into them that could lose them all their money. I think it's because the reason why people are buying into it is because of short-term games and they see it going up quickly. It's like FOMO, fear of missing out, and then that's when you lose a lot. The people who are going to make the most money are the people who bought the coin years ago when it was pennies or a couple of quid. When they took a punt, it's like put 100 quid into it and see how it goes. But it's too risky now, you left it too long, and now it's not. I personally wouldn't buy any. No. If you're going to buy anything, I would buy the physical assets like metals, precious metals. If me, I would be the precious metals personally. Which actually is like physical. The Financial Conduct Authority said that given volatility, complexity and lack of regulation of crypto assets such as investments pose high risk for UK consumers. Part of its warning involved that unregulated platforms are using to buy Bitcoin. That's also another reason why people do like it, because it's unregulated and it's decentralized. But then when people lose money, then you can't really complain to a centralized system to insure it. To me, that just doesn't make sense personally. But anyway, it's a topic for another day or later. Its timely warning arrived as Bitcoin tumbled by almost a quarter over the past 24 hours. I also think that has maybe something to do with people who bought it at the last time high. I think when it was the last time high. Let's have a look. When was that last high? Where is it? I wasn't showing that map. Anyway, So it went up to about 15,000 bucks. I think these people are getting out now, and there wasn't more people coming in to keep the price going up. There's more sellers than there is buyers. Its timely warning arrived that as Bitcoin tumbled almost a quarter over the 24-hour period, with the slump coming after its peak at $41,962. I think people got a bit too greedy and they should have just sold out or trimmed back on their position, because it's about having a balanced portfolio that's not too much into one sector or into too much single asset, such as, for example, I've watched YouTube videos and done a little bit of research on me. A lot of them seem to be saying never be more than 15% into one sector, say consumer staples or oil or something like that, and never for more than 5% then like into a single stock or like a single asset, like one single property or something like that. Anyway, so it's saying that the peak was hit within a week of it breaching 30,000 bucks for the first time in less than a month, and as it broke more than $20,000 mark. These people got lucky who bought it. They're not really financially savvy. They basically got lucky. And obviously with interest rates being so low, it's pushing people into different things, because with interest rates being so low, inflation being above the interest rate, it's causing people to find out different things. And they're seeing Bitcoin rise dramatically, and then they're jumping on the bandwagon, not fully knowing why they're holding it, what Bitcoin actually is, and why it exists. I bet if you ask some of these people who bought them, they wouldn't be able to tell you how many Bitcoins there are, how many have been lost, how many have been mined every hour, or how many get released every hour, or things like that as well. Other cryptocurrencies have also tumbled within the second most popular cryptocurrency. Ethereum also slipping as much as 25% to $966. The sell-off follows a spectacular rise after Bitcoin smashed the $20,000 level in mid-December and more than doubled the price in just a month. The watchdog said the FCA is aware that some firms are offering investments in crypto assets or lending or investments linked into crypto assets that promise high returns. If something has massive high returns, it's going to have massive high risk. And can you afford to lose all or some, or maybe all, and maybe you have to wait a very long time to get back to zero and just making your money back you've lost, as well as if you put inflation on over the period of time, you probably would get back less than you've actually made. So it's not as simple as just that. It's just, you just got to be very careful. I'm not a fan of the cryptocurrencies. As I said, if you own anything, own them, maybe some gold, silver. I don't know much about platinum and palladium, but the metals seem to be a better option, as it's also more mined out of the ground, so it's not limited, so it does keep up. If you follow it, it kind of does keep up with inflation, but it doesn't beat inflation. You're preserving your current wealth, but you're not increasing. You're just hedging against inflation and just trying to keep track with it. That has very low risk because it doesn't have a yield and it doesn't pay a dividend either. But that's the beauty of it, because it's not an investment. Invested in crypto assets or investments such as lending linked to them generally involve taking higher risk with investors' money. If consumers invest in these types of products, they should be prepared to lose all their money, and that is very, very true. Do not put money in that you cannot afford to lose, such as rent money, bill money, nest egg money, emergency fund money. You should never use money that you cannot afford to lose. Basically, it said that the complexity of these products make it hard for people to understand the risks, and significant price volatility places consumers at a higher risk of losses. And it does. He also warned that some investors advertising higher returns based on crypto assets may not be subject to regulation beyond anti-money laundering requirements. I do think Bitcoin does have some uses as well. One of them is if you live in a very harsh country and you're fleeing the country and you want to go to another country, it may be advisable to maybe buy a Bitcoin and then send like the Bitcoin wallet on a USB stick to another address in another country, then fly out, and if you can fly out, obviously if you're allowed to leave, and then you can reestablish a new life. So it does have some uses. I'm not gonna lie, it doesn't. But it also does enable criminal activity. Well, now crypto is more trackable. They say it's not, but it's online, so it's gonna be. You got very smart cookies probably been able to figure out, and it is probably able to be tracked now. The FCA said that the crypto assets related investments consumers are unlikely to have access to the Financial Ombudsman service on the Financial Services Compensation Scheme if something goes wrong. To me, this is like really high risk. When I look for a dividend yield on a stock, I don't really want to go above 4.5%. I like to keep it around 3 to 4 if I can. If you get like 5 and above from like a stock or an ETF, you're going to have to be willing to take on more risk or hold it for a longer period of time. Even the world's most famous cryptocurrency platform, Coinbase has been hit by a series of problems since mid-December, with investors being reported being locked out and unable to buy and sell. Suzanne Streeter, a senior investment and market analyst at Hargreaves Lansdown, great company, and I am with them, said that the FCA was clearly worried that the crypto Wild West could be running out of control. Commenting on today's Bitcoin sell-off, she added there is much speculation that Bitcoin will become more mainstream, especially with more institutional investors being involved, but the future of cryptocurrencies remains highly uncertain. Bitcoin price is being driven primarily by the future price of speculation than an underlying use case. So what that basically means is people are buying it knowing, well, they're not knowing, they're thinking it's going to go up and they're going to flip it to someone else, and then they're going to take on, and then they're going to want the national currency in return, which doesn't make sense to me for some reasons. For the very reasons is you're buying that asset because you don't believe in the currency's national currency in the first place. That's what the purpose of the coin is. Now that doesn't make sense to me personally, but anyway. So Bitcoin's price is driven primarily by future speculation rather than underlying use case. Leah Fkalov, sorry for butchering your name, a financial analyst at AJ Bell, Echo Street's comments. The regulator is clearly concerned that the high street already inherent in crypto assets are being compounded by scam activity as well as unregulated firms targeting consumers with marketing material that highlights the reward, but not the potential downside of investing in crypto assets. And that is very true. You can see how the rapid price appreciation combined with aggressive marketing and low interest rates on cash creates a perfect storm for consumers looking I think of being a bit kind there. There's like, I would even use the word greedy return on their money, and I mean that in like I mean it like your greed is blinding you to the risk that you're taking. You're not thinking clear. That can drop down considerably. It already has been said it's 22%, isn't it? 22% of what, $30 grand? It is a big dip. That is a big dip, especially if you bought that at a later on period. Where was we? The FCA said that people should be wary if they contacted out of the blue, pressured into invest quickly, or promise returns that sound too good to be true. And that is true. This YouTube has this problem as well, where people are posting, where people are pretending to be someone else, or the content creator themselves, and they're stealing their username and their icon and saying, oh yeah, I'm with this broker here, contact this number and he'll give you a good return. If you see that anywhere in my comment section box below, that is not me. That is some fraudster committing a crime for trying to commit fraud by impersonation. I would never, ever, ever advise you to go to a broker out of the blue and give out someone's mobile number, which is fictitious anyway. I would not ever advise you to ever contact them. It's a fraudster. Report it to spam and comment in the comment. If I miss it, I will try and delete them and block them. But if you do see it, put in the comments, that is not true. I am not that person. Just be very careful. They're fraudsters, and I will do my best to delete them. And I obviously said I will never advise you, as I can't give advice. I'm not a financial advisor. But I personally would never buy Bitcoin. And to me it seems a bit strange if you just think about it. Would you be happy if someone just gave out your phone number on like a YouTube comment section box below to comment, and for them some random Joe Blogs to phone you? It just doesn't make sense to me personally. But it's because people are getting blinded by the greed. And that's something to be aware of. Sorry for that little ramble, if it didn't make much sense. I might have to neaten it up a bit. So anyway, since January the 10th, all UK crypto asset firms must be registered with the FCA under regulation to tackle money laundering. So that's already happened. It's the 12th today, so that's already happened. Because money laundering can happen through that. The regulator said consumers should check that if the firms they're using is on the Financial Services Register here, or in the list of firms that temporary registrations file download. If they do not consume, should ask the firm whether they are entitled to carry the business without registered FCA. If it's not, the FCA suggests consumers should withdraw their crypto assets and or money. Personally, I would withdraw my money into them regardless, anyway, if they are or they aren't, because I personally do not like crypto assets. Now let's just see what people are saying. Now let's see what people are saying in the comments. Yeah, sell, 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 sell. What that one said here would be, was one comment here, I can't find it, is basically saying people will regret because people will be using cryptocurrency in the future. Well, technically now we do really have a cryptocurrency. It is with the British pound. How often do you pay? Well, you may be the odd exception to the rule, but if you take us on a whole, how often do people go to an ATM and just solely pay in cash? Percentage wise, do you pay more with plastic Visa or MasterCard, or more with a physical cash? You may be the odd exception to the rule if you're paying with physical cash, but how often overall do you think people pay with physical cash? Just a thought there. So if you liked this video and you want to see more, then please feel free to subscribe to this channel, click the bell notification button so you don't miss a video. Comment and I'll get back to you as soon as possible. And as I said, I am not a licensed professional. This is not financial advice. This is just me documenting my journey, hanging out with you guys and getting feedback and hearing different perspectives. So thank you for watching, take care, and I'll see you all soon.